This escalation in the South China Sea between China and Vietnam, clearly serious with the sinking of the boat. How concerned are you that it will begin to have an impact on the economy there?
Well, when I look at the situation, it's basically a tale of two countries, each vying for a larger role within the international community in order to sustain growth. That's probably the best way to perceive what's happening right now. One needs to understand that both China and Vietnam are very tightly integrated as trade partners. In fact, they have captive markets to each other from the perspective of both price and logistics. So according to the latest statistics by the General Statistics Office, you'll see that Vietnam's managed to achieve a trade surplus recently with up to 16 countries, the U.S. being the largest country at approximately $18 billion last year. Notably, China is Vietnam's largest trade deficit with over negative $23 billion. And this trend continues to develop this year. So when you take a look at the bilateral trade, one must recognize that at the end of the day, China is the fourth largest export market for Vietnam, and China is Vietnam's largest trading partner.
Peter, of course, Vietnam, a major player in the global supply chain, and increasingly we see Western companies moving operations to Vietnam. Manufacturing, for example, the apparel industry has large presence there. Doesn't this have a wider impact, certainly, if that supply chain is disrupted by this ongoing threat, if you will?
Yeah, that's an excellent question as well. And the way that I perceive this, as I indicated to you earlier, is that the trade deficit that Vietnam has with China is for a reason. It's actually for Vietnam to import the raw materials that are necessary in order for them to become a much larger exporter to the rest of the world in order to sustain their trade surplus. The ramifications of this is that you're going to see implications with the Trans-Pacific Partnership and its implications with foreign direct investment. So, you know, it's kind of like an interdependent relationship amongst both countries, which also will allow one to see that there's only a limitation to how much the issues within the South China Sea can escalate.
It seems to me, if I'm a foreign investor, that investing in the Mekong right now is not something that I want to be doing. Is that the call, the recommendation that you would be making to investors?
Yeah, like generally when you take a look around the region right now, Thailand, Indonesia, Malaysia are all having their own issues. Same with Vietnam. I recently called the top on the VN index at about 600 in April with an issue of active trader. Some of the key issues with Vietnam are that the NPLs are still lingering and you still have effectively a real estate lockup. We also need to see certain precedents that will be set towards any kind of systemic risk for malpractice within the banking industry itself. So my hope is that what you'll identify is that the Trans-Pacific Partnership will help the country boost its textile exports, which could be up to $22 billion, and it could help in regards to the trade of seafood between Vietnam and the United States. So hopefully everything in the long term will have minimal impact, but in the short to immediate term, one would probably have to stay out of the Mekong region to some extent.
So how does this dovetail then with the launch of your new fund, the Prestige Global Growth and Income Fund? I can imagine it must be difficult to launch a new fund at a time when there are tensions rising and people are very wary about putting money into the country. So what are you recommending to investors with that fund?
Right. Well, we recently started managing the Global Growth and Income Fund. It's been around for a few years. What we've done is we've actually changed the geographical breakdown. So we have 35% within the United States, 25% within Europe, and about 40% within the Asian Pacific. For any of the American companies that we do find interesting, we'll try to make sure that there's certain allocation in terms of sales or operations that are existing in Asia to capture the growth that we still see within these markets. As you know, it's quite hard to find absolute return in this market. So we see value right now within timberland, uranium, grease, and even marijuana. So I've liked the timber trade for quite some time because it's very counter-cyclical and it's creating a very good opportunity right now. So like according to the National Council of Real Estate Investment Fiduciaries and Hancock Timber Resource Group, timberland has been only down for 4 years since 1960 in total compound annual return perspective. So what we see right now is that we see land prices going up in selected parts around the world. We see wood prices reaching a bottom, and we see that trees do grow at a 6% rate every year. And we notice that this provides very minimal land holding costs if you are invested into timberland. So right now we like real assets, not necessarily paper assets, because we believe that some of the paper assets are overvalued. So as of late, we've seen some relative outperformance in terms of the fund based on our timber holdings, our exposure to grease, and we'll continue to look for other interesting opportunities around the globe.